All right, today we are diving into a pretty bold Bitcoin prediction. We're talking about a warning from a veteran trader who sees a major correction on the horizon, all based on a pattern that's shown up again and again throughout history. Let's take a look at what the charts are telling him. $25,000. I mean, could that really be where Bitcoin is headed next? It feels like a massive drop from the recent highs, for sure. But the analysis behind this number, it's actually rooted in decades of watching the markets. So where on earth does a number like this come from? So the guy making this call is veteran macro trader Peter Brandt, and the heart of his argument is right there in that quote. See, he's not just pulling a number out of a hat. He's pointing to a very specific chart pattern that he says has officially been broken. And historically, when this pattern breaks, it tends to lead to some, well, very significant drops. Okay, so to really get a handle on Brandt's warning, we first have to understand the main technical idea he's talking about. It's called the parabolic break, and it's a pattern that has pretty much defined Bitcoin's most dramatic, most explosive bull runs. Just think about Bitcoin's biggest rallies, right? They don't just move up in a nice, steady, straight line. They often form this really steep, curving pattern that looks like, well, the side of a parabola. The price gains actually speed up, getting faster and faster as all that excitement and FOMO just kicks into overdrive. And here's the absolute kicker. These kinds of wild, explosive, parabolic moves, they're just not sustainable. According to Brandt, and really market history in general, they always, and I mean always, come to an end. So the real question isn't if they'll break, it's just a matter of when. So, a parabolic break is just that moment when the steep upward curve gets broken, when the price finally falls below that accelerating trend line. It's like a big flashing warning signal that the crazy buying frenzy is over and a cool down period, or, more likely, a pretty big correction, is probably getting started. Now, this one pattern actually feeds into a much bigger idea that Brandt is pointing to. It's not just about a single broken trend line. It's about a long-term theory of how Bitcoin is changing as an asset. He has a name for it. Exponential decay. Exponential decay sounds super technical, right? But the idea is pretty simple. As Bitcoin gets bigger, as its market cap grows into the trillions, it just gets a lot harder to, say, double or triple its value. Those insane 100x or 1,000x gains from the really early days, they start to become a mathematical impossibility. Each bull cycle, while still super powerful, just delivers a smaller percentage return than the last one. Now, let's be crystal clear about this. This theory doesn't mean Bitcoin's value is going to zero or that it can't hit new all-time highs. Not at all. It just suggests that Bitcoin is, well, it's maturing. It's shifting from a speculative, kind of startup phase asset to a more established global one. And its growth patterns are starting to reflect that. Okay, so that's the theory. But what about the proof? I mean, Brandt's entire argument hangs on what's happened in Bitcoin's past cycles. So let's actually dig into the historical data he's using to build his case. And when you look at the numbers, a really clear trend starts to pop out. Back in 2011, Bitcoin crashed a whopping 94%. Ouch. After the 2013 peak, it fell 87%. Then after the huge 2017 run, it corrected 84%. And in the most recent cycle, the drop was a bit shallower, but still a really painful 77%. The pattern is it's undeniable. The corrections, while they're always brutal, they are becoming slightly less severe over time. This chart really just paints the picture of exponential decay perfectly, doesn't it? You can see that even though every major bull run has ended in a correction of 80% or more, the actual severity of that drop has been slowly, but surely, decreasing. This is the historical analog Brandt keeps talking about. Which, of course, brings us to the big question. We've gone over the theory, we've looked at the history, but how does Brandt connect these past cycles of 80+% drops to a specific price target of $25,000 right now? Well, the math is surprisingly simple. Brandt starts with the recent all-time high, which he has marked at over $126,000. Then he just applies a standard historical correction of roughly 80%. And an 80% drop from that peak, it lands you right around $25,240. See, it's not a random guess, it's just simple math based on these repeating historical patterns. So let's pull all this together. What is the key takeaway from Peter Brandt's entire analysis? At the end of the day, it's a story about Bitcoin growing up and what that might mean for everyone involved. So, to recap the whole argument in 5 quick steps. 1. The recent sharp uptrend has been violated. Check. 2. History shows us that these breaks usually lead to corrections of around 80%. 3.
we can also see that these corrections are getting a little bit milder over time. 4. This whole phenomenon is what Brandt calls exponential decay. And 5. It all points to one big conclusion. Bitcoin is shifting into a more mature phase of its life.
And that leaves us with a really fascinating final question. Peter Brandt's analysis isn't just a short-term price target. It's a bigger statement about Bitcoin's evolution. If he's right and the crazy, explosive growth of its youth is starting to settle down, what does that mean for its role in the global financial system? What kind of asset does it become next? Now that is the bigger picture to really think about.